Have you ever entered a trade, got stopped out, and then watched the market move exactly in the direction you expected? If so, you probably didn't misread the market. You simply entered before the pullback was over. In this video, you'll learn what a pullback really is, why it happens, the different types of pullbacks, and how to identify the ones that offer the highest probability trading opportunities.
Let's start with the basics. A pullback is a temporary move against the main trend. That's it. Nothing complicated. If the market is moving higher and suddenly drops for a short period before continuing upward, that drop is called a pullback. If the market is moving lower and suddenly moves upward for a short time before falling again, that's also a pullback. Notice something important. A pullback is temporary. The main trend hasn't changed. Price is simply taking a short pause before making its next move. Many beginners think that a strong trend should move in one direction without stopping. But that's not how financial markets work. Markets breathe. They move, they pause, they continue. That natural rhythm creates pullbacks.
Why do pullbacks happen? So why does the market pull back in the first place? There isn't just one reason. Several things happen at the same time. The first reason is profit-taking. Imagine you bought an asset early in an uptrend. After a strong rally, many traders decide it's time to lock in some profits. They start selling. That selling pressure pushes the market lower for a short period. But remember, taking profits doesn't automatically mean the trend is ending. It's simply a temporary pause. The second reason is new buyers. Many traders don't like chasing price.
If they missed the initial move, they'll patiently wait for price to come back to a better level before entering. That creates fresh buying interest during the pullback. The third reason is simple market psychology. Markets rarely move in straight lines because buyers and sellers are constantly interacting. Every movement is the result of thousands of trading decisions happening every second. That's why pullbacks are completely normal. In fact, a trend without pullbacks is actually unusual.
Why traders love pullbacks? So here's an interesting question. If pullbacks move against the trend, why do experienced traders actually wait for them? Because pullbacks often provide better entries. Let's compare two traders. The first trader gets excited. He sees the market rising fast and immediately buys because he's afraid of missing the move. The second trader stays patient. Instead of chasing price, he waits for the market to pull back. When price reaches a better area and buyers begin stepping in again, that's when he enters. Now, think about who has the better position. Usually, it's the patient trader. His stop loss can often be smaller. His risk-to-reward ratio can be better. And emotionally, he isn't chasing the market. That's why experienced traders don't hate pullbacks. They welcome them, because pullbacks create opportunities.
Now that you understand what a pullback is and why it happens,
So let's talk about the different types you'll see on the chart. 1. Shallow pullback. Let's begin with the shallow pullback. As the name suggests, this is a pullback that doesn't retrace very far before the trend continues. Imagine a strong uptrend. Price moves higher, pulls back just a little, and then buyers quickly take control again. This usually happens when momentum is extremely strong. Buyers are so confident that they don't allow price to fall very much before stepping back into the market. Shallow pullbacks often appear during powerful trends, especially after strong bullish or bearish moves. The advantage is obvious. They show strength. But they also come with a downside. Because the pullback is small, your stop loss is usually closer to your entry, making it easier for normal market fluctuations to stop you out. That's why many traders wait for additional confirmation before entering. 2. Deep pullback. Now, let's compare that with a deep pullback. Instead of retracing only a small portion of the previous move, price comes back much further before continuing the trend. This often scares beginners. They assume the trend is over. But that's not always true. Healthy trends can produce deep pullbacks and still continue moving in the same direction. The key is to stay patient.
Instead of reacting emotionally, watch how price behaves around important support or resistance levels. If buyers begin defending support during an uptrend, the pullback may simply be giving you a better entry. Deep pullbacks can offer excellent risk-to-reward opportunities, but they also require more patience and confirmation. 3. Break and retest pullback. One of the cleanest pullbacks you'll ever see is the break and retest. Here's how it works. Price breaks above an important resistance level. Instead of continuing straight up forever, it comes back to test that same level. If the old resistance now acts as support and buyers step in again, the trend often continues. The opposite happens during a downtrend. Price breaks below support, pulls back to test it from underneath, and then continues lower. This is one of the most popular pullback strategies because it follows a simple principle. Once a key level is broken, the market often returns to test whether that breakout was genuine before moving away again. That's why experienced traders rarely chase breakouts. They wait for the retest.
4. Trend line pullback. Another common type is the trend line pullback. When a market is trending, you can often connect a series of higher lows in an uptrend or lower highs in a downtrend with a trend line. As price returns to that trend line, many traders begin watching for buying or selling opportunities. But here's an important point. A trend line should never be treated as a magic line. Price won't always reverse perfectly from it. Instead, think of it as an area where you should pay closer attention. Wait for confirmation before entering. The trend line is simply helping you identify a potential opportunity, not guaranteeing one. 5. Moving average pullback. Many traders also use moving averages to identify pullbacks. Instead of looking at a horizontal support level or a trend line, they watch dynamic support and resistance created by moving averages. For example, during a healthy uptrend, price may repeatedly pull back toward the 20 EMA or the 50 EMA before continuing higher. The same idea works in reverse during a downtrend. One mistake beginners often make is buying the moment price touches the moving average. That's not enough. A moving average should support your analysis, not make the decision for you. Always look at the overall trend and wait for confirmation from price before entering. 6. Fibonacci pullback. The final type we'll discuss is the Fibonacci pullback. Many traders use the Fibonacci retracement tool to estimate how far a healthy pullback might travel. The most commonly watched levels are 38.2%, 50%, and 61.8%. These aren't magic numbers. They simply highlight areas where traders often expect the trend to resume. Think of Fibonacci as a measuring tool rather than a prediction tool. Just because price reaches a Fibonacci level doesn't mean it has to reverse. Instead, combine it with support, resistance, and price action to make stronger trading decisions.
So, which pullback is the best? So after learning about the different types of pullbacks, you might be wondering, which one is the best? The answer is simple. There isn't one perfect type of pullback. The best pullback is the one that forms within a healthy trend, respects an important technical level, and gives you clear confirmation before you enter. How to identify a high-quality pullback? So how can you tell whether a pullback is worth trading? Ask yourself these 5 questions. First, is the overall trend still intact? If the trend is weak or unclear, the pullback becomes much less reliable. Second, did the pullback reach an important area? That could be a support level, a resistance level, a trend line, a moving average, or a Fibonacci retracement level. Third, did price slow down as it approached that area? Healthy pullbacks often lose momentum before the trend resumes. Fourth, did buyers or sellers actually step back in? Look for clear rejection candles or strong continuation candles before entering. And finally, does the trade offer a good risk-to-reward ratio? Even a good setup isn't worth taking if the potential reward doesn't justify the risk.
Common mistakes.
Now let's look at a few mistakes that almost every beginner makes. The first mistake is chasing the market. When price starts moving quickly, many traders become afraid of missing out. Instead of waiting for a pullback, they jump into the trade. Unfortunately, that's often when the pullback begins. The second mistake is entering too early. Just because price starts pulling back doesn't mean it is finished. Patience is one of the most valuable skills in trading. The third mistake is trading every pullback. Not every pullback deserves your attention. Sometimes the trend is weak, sometimes the market is moving sideways, and sometimes the risk simply isn't worth taking. Remember, your job isn't to trade every opportunity. Your job is to trade the best opportunities.
If you found this video helpful, make sure to leave a like and subscribe for more trading lessons designed to help you become a smarter and more confident trader. And let me know in the comments, which type of pullback do you use most often in your trading? Thanks for watching, and I'll see you in the next video.